The cryptocurrency community is abuzz with anticipation and skepticism. The U.S. Securities and Exchange Commission, or SEC, is poised to make a decision regarding the approval of a highly anticipated Ethereum exchange-traded fund, or ETF. The general sentiment among crypto enthusiasts is one of cautious pessimism. Most believe that the SEC will once again delay its decision, citing concerns about market manipulation and investor protection. The SEC has consistently maintained a hawkish stance towards cryptocurrencies, leaving many to believe that an approval is unlikely in the near future. Despite the prevailing skepticism, there's a glimmer of hope among some members of the community. They argue that the recent approval of Bitcoin ETFs could pave the way for an Ethereum ETF. They point to the growing institutional interest in Ethereum as a sign of its increasing legitimacy and maturity. Furthermore, Ethereum's upcoming transition to a proof-of-stake consensus mechanism is expected to address some of the SEC's concerns regarding energy consumption and environmental impact. However, the SEC's history of stringent regulations and its cautious approach towards cryptocurrencies casts a shadow of doubt over these optimistic projections. The Commission has repeatedly expressed concerns about the volatility and lack of transparency in the crypto market. It has also raised questions about the potential for fraud and manipulation, particularly in the absence of a comprehensive regulatory framework. These concerns have led to numerous delays and rejections of cryptocurrency-related products, including ETFs. As the SEC's decision date approaches, the crypto community remains divided between cautious optimism and outright skepticism. The outcome of this decision has the potential to significantly impact the future of Ethereum and the broader cryptocurrency market. A green light from the SEC could open the floodgates for institutional investment and mainstream adoption. On the other hand, a rejection could further dampen investor sentiment and reinforce the perception of cryptocurrencies as a risky and unregulated asset class. While the crypto community grapples with uncertainty, market analysts and experts are closely monitoring the situation, offering their insights and predictions. One such expert, Matthew Hyland, a prominent cryptocurrency technical analyst, has been vocal about his views on the potential approval of an Ethereum ETF. Hyland, known for his data-driven approach and insightful market commentary, believes that the SEC's decision will be heavily influenced by the performance of the Bitcoin ETFs that were recently approved. According to Hyland, the success of these Bitcoin ETFs, particularly in terms of trading volume and investor participation, could encourage the SEC to adopt a more favorable stance towards Ethereum. He argues that if Bitcoin ETFs demonstrate the viability and investor demand for crypto-based financial products, the SEC might be more inclined to consider Ethereum as a suitable candidate for an ETF. This perspective aligns with the belief that the SEC's primary concern is ensuring investor protection and market stability. However, Hyland also acknowledges the possibility of continued regulatory hurdles. He points out that the SEC's concerns about Ethereum's market dynamics, including its volatility and potential for manipulation, might outweigh the positive indicators from the Bitcoin ETF market. The SEC has repeatedly emphasized the need for robust surveillance and regulatory frameworks to prevent fraud and protect investors. Until these concerns are addressed to the SEC's satisfaction, the approval of an Ethereum ETF remains uncertain. Despite the lingering uncertainties, Hyland remains cautiously optimistic about the long-term prospects of an Ethereum ETF. He believes that Ethereum's growing adoption, its technological advancements, and the increasing institutional interest in the cryptocurrency will eventually lead to a regulatory breakthrough. As the crypto market matures and demonstrates its resilience, the SEC's stance might evolve to accommodate the growing demand for regulated investment products linked to Ethereum. Imagine a scenario where the SEC, contrary to widespread expectations, makes the unexpected decision to approve an Ethereum ETF. This unforeseen development would send shockwaves through the cryptocurrency market, triggering a cascade of reactions and readjustments. Traders, investors, and analysts alike would scramble to reassess their positions, while the price of Ethereum would likely experience a dramatic surge as a wave of new investment pours into the market. The initial reaction would be one of disbelief, followed by a surge of euphoria as the implications of the approval sink in. The long-awaited validation from a major regulatory body would instantly legitimize Ethereum in the eyes of many institutional investors who have remained on the sidelines due to regulatory uncertainty. The floodgates would open, and a torrent of capital would flow into the Ethereum market, driving its price to new all-time highs. This unexpected approval would not only impact the price of Ethereum, but also send ripples throughout the entire cryptocurrency ecosystem. Other altcoins would likely experience a surge in price as investors, emboldened by the SEC's decision, diversify their holdings. The overall market capitalization of cryptocurrencies would swell, attracting even more attention from mainstream financial institutions and investors. The SEC's unexpected approval of an Ethereum ETF would mark a pivotal turning point in the history of cryptocurrencies. It would signal a shift in regulatory perspective, paving the way for wider adoption and integration of cryptocurrencies into the traditional financial system. This development would have far-reaching consequences, impacting everything from investment strategies to the evolution of blockchain technology.